General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Microphone right. All right. There's some interesting headlines. Seeing some Democrats got arrested today. They're getting ready for the 14th, which is, I don't know. Kind of want to get puts for next week if they do really turn up. We'll see though. Today's the 12th. We shall see. Okay. Friday, consumer sentiment. Let me get screen grabber as usual. Okay. Consumer sentiment. Consumer sentiment at 10. So that's in my trading window. Let's go to CME Fed Watch. See if PPI changed it, but I doubt it. That's it for the news cycle up until this meeting. It's pretty much the same. Let's go to the 30th. Okay, so that actually went down. Okay. July 30 went down to 76%. Let's look and see what it was on yesterday, since I have it in the logs. Wednesday. Okay, it went down 4%. which is a 4% drop. So maybe if the news start trending this way, then it will increase chances for a rate cut based on data, which could be like a diabolical plan rollout anyway. Let's look at earnings. It's never anything on Friday. Never anything on Friday. Not going to move the NASDAQ. Tomorrow is all about consumer sentiment. Dollar on the daily. I believe that I had the dollar going down, but I'm feeling like the dollar. Okay, range low has been smacked, ladies and gentlemen. Okay. Price did a good run on liquidity. So no. NFP week we chop. CPI week was expansion. Okay. It's like 3-day cycles. It has that vibe. Or 3-week cycles. Let's go here. Target hit today. Okay. Oh, wrong button. Today was a push-up day. Push-up day. It looked like we just pushing up to go down. Think in terms of weeks. Day of week. Tomorrow, Friday. Price is already at EQ of the range. The current week range. We can chop and hold. Until something else drives the market. News or economic data. Weekly. Don't look like price is trying to make any new higher highs. Let's go to the daily. It was Monday low smacked. That was a part of the plan, but I wanted it to go up and then down, not down and then up, to confirm this retracement, have another down candle. But let me see this. Oh, we got equal lows here. Not. I'm surprised it's not no SMT right there. Could be. Could be like when next candle prints or something like that. I'll put the SMT indicator on here. That way I don't have to go through all that when I'm looking for it. Let's see. We created equal lows today. With Monday's low. Last 2 days has been housed inside of today's, what's that, Tuesday's candle body. Let's go to H4. Re-hit this, created this. We do got a gap here that needs a down candle, which is interesting. We already hit weekly objective. If we had business to take care of, we would have took care of it. Price is dropping in this range. There's no PD array really supporting price. That's pretty much it, cuz you can overread it and then just be confused. When you could just wait for a raid and it'll just tell you what it's going to do. Consolidating. So far, no PD array has confirmed into institutional order flow. Let's go here. That's a key point in itself. Like trying to play this even for like a scalp, but the higher time frame is saying, look at how many choppy days we had. I don't have no target for Friday except for this, just equal lows. We can run the high and that'll be a point of interest. That's it. Very high. pay attention. The only thing to catch my eye here is the equal lows. If we run the high and give clean structure, I will put small risk on. Just chop you to death slowly. If you keep the risk smart, you can survive. First set at previous day's high. I would want to see all those wicks ran or swept. And really ran. I can put a candle body through it. Absorb the liquidity. Then start a sales program. Break out the range to the bottom. That's the plan. All right, that's that on that. Y'all have a good day. Peace.